Across to Siddhartha Khemka, head research at Motilal Oswal Financial Services, who joins us. Hi Sid, good morning. Good to see you. Ben, what's your take on Zomato? They're already sitting on 10,000 crores of cash. They yet want to go ahead and raise some money. What's your best guess and how would you approach the stock?
Yeah, good morning, Nigel. Thanks to be on the show. I think that's the question the entire street is asking. With 12,500 of cash before the acquisition, roughly we will take about 10,000 crores of cash already there. So it looks like the company is trying to build in a war chest for the growth going forward. So some of the newer ventures, for example, the district vertical, which it plans to build after the Paytm acquisition, the going out vertical, that would need some amount of cash. I believe that could help, the fundraise could help towards that extent. It is also considering to relaunching its quick parcel service, which was earlier named Extreme, also strengthen up its food delivery business. I think there are capital requirements to build this business given the increasing competition, especially in the quick commerce business where they have now started doing very well. So there will be definitely questions in the market with respect to what's the size of the QIP and what the intent is to be. But definitely, I think they are building up this capital to build businesses over the next few years.
Siddhartha, hi. What about Manappuram Finance? Morgan Stanley today has downgraded it to an equal weight. The target price is slashed to 170. They're cutting consolidated earnings forecast by 20% for this year and 30% for FY26, FY27. Jefferies has also downgraded the stock. The parent may have to infuse capital if the subsidiary's net worth is eroded. So now if someone has Manappuram Finance, today you'll see the stock under pressure. Is it still a good idea to exit? What would the advice be for existing shareholders?
Yeah, Rima, good morning. So even we have downgraded the stock to neutral. We expect the company to underperform till the RBI ban is revoked, which may take anywhere between 6 to 9 months at least, and if not earlier. So even we have cut our estimates by about 9% for this year and up 17% for the next year to factor in the lower loan growth as well as So I think the strategy should be clearly to exit, and because this is a serious issue with the business. If you look at the contribution, it's almost 30% contribution comes from the Ashirwad in terms of AUM, about 20% from in terms of profitability. So that will be a big hit to the Manappuram business, and even the future plans of getting the Ashirwad IPO in future. So the story gets pushed by at least 2 to 3 years from now. And while the management sounds confident that they will look into the issues and resolve it as soon as possible, but clearly we believe that this issue could lead to underperformance in the near term. Even if the stocks opens about 8 to 10% lower, one should exit. Our target price is 160. So I think that is where the stock price will open today, and that could be an area where one should exit and look at other opportunities in the market.
Very clear in that thought. That said, you're saying 160 if it opens out, you want to get out of it, you want to stick to the winners. Got that said.